Good morning traders, welcome to this Phoenix Blue morning update on Tuesday the 3rd of May. I'm Tom Colley and I'll be taking you through the news and the markets this morning. First thing I want to mention though is the new Phoenix Blue website is now up and running. If you're new to Phoenix Blue and you want to know more about us, or you want to sign up for various things, links, etc., please just visit us there at phoenixblue.co.uk. Okay, let's start with the news, as usual. Over the weekend, we have had manufacturing PMI from China coming in very much in terms of on expectation, and nice consistent results recently for that. We had some ISM manufacturing for the US yesterday, which came in slightly negative. But then overnight, last night, we had the catering manufacturing from China, which came in at 49.4 versus a forecast of 49.8. Anything below 50 is considered contraction. This result probably came as quite a disappointment to the markets. Bearing in mind we've seen some, in other areas, we've seen better numbers coming out of China in the last few weeks. And then we've already had also at 5:30 this morning, we had a big announcement. This is the cash rate. The headline interest rate from the Bank of Australia reduced from 2% to 1.75%. That was followed by a rate statement which didn't really give away anything else, but the point of interest possibly here going forward today and in the next few weeks is this rate reduction is ahead of a budget, a federal budget, which is due today, which in turn is ahead of an expected parliamentary election, which is being called. Going forward, we've got GBP manufacturing at 9:30 this morning. We've got what's tentative but normally early afternoon. We've got the dairy price index from New Zealand, then overnight employment and unemployment from New Zealand. So let's have a look what these recent events have done to our charts, and we'll start over in the Far East. This is the Shanghai Composite, the composite of the major Chinese stock exchanges. The level here is the one we've been watching all year, which is the 2015 lows, which, as you can see, price has been reacting with quite consistently, both in terms of support, or resistance and support again through here. The most recent session overnight, we've had a bullish session, but still around these 2015 lows. So until we come back up to this level and we break this, we're still in much of a ranging picture there. Over on the Nikkei, well, we had the Bank of Japan statement last week. Unexpectedly, there was no additional quantitative easing after news leaks about negative interest rate loans to institutions and things like that. We had a huge sell-off on Thursday following that announcement or lack of announcement. We sold off again on Friday, and then through yesterday and overnight last night, we've created a couple of inside bars there, showing a little bit of an indecision from this point here. Having said that, I put in a trend line here. It's only a two-touch trend line here, but obviously if price breaks below that, that is going to very clearly put the Nikkei back into a bearish mode. The big news today, or even this week, will be around the dollar. When this was taken early this morning, price was set on this key level at 92.50 US dollars. On the weekly dollar index we're looking at here. As I look at the chart now at 5 to 8 in the morning, price has broken below this level. This is the last significant level of support that we have based on this big ranging area here. If that price breaks, the next significant level is right down here, so we'll see a real weakening of the dollar, and we'll be looking to change our bias, which has been all this year has been dollar strength, but this is the last call. If price breaks below that, closes below that, then that dollar strength bias will reverse and will become dollar weakness until at least the next level here. We'll see that here over on the US dollar JPY, the yen. This is the weekly chart again. Again, we can see last week we got a big strengthening of the yen following the lack of further intervention from the Bank of Japan. You'll see we've got a level here which we're looking to trade in conjunction with that 92.50 level on the dollar index. Those being roughly in confluence, so we would look for the dollar to bounce on 92.50 and correspondingly the yen to weaken at that point if dollar strength comes back into the market. The same here true for our level here on the euro, again reliant on that 92.50 dollars on the DX, the dollar index. There's less of a level, if I'm 100% honest, if this is a smaller risk trade, which is almost exclusively based on that 92.50 level. We have, as I said this morning, seen that level broken. So far, this trade is still in play. But if we get a more significant move below 92.50 today, that will stop us out on that trade. The Swissy, again corresponding to the dollar index, we've a lovely level here at 9,500. We're expecting, as I say, as long as price reacts on the dollar and the strength comes back, to see the long side back in on this as dollar strength pushes through. Now, the news we mentioned about earlier, we had a drop in the rate from the Bank of Australia. This is what we saw this morning. We saw an immediate 130 pip reversal in this market. We have been watching levels here at I think that's 78.50 and also down here at 7,500. We'll be looking now on the downside following that rate reduction, and we'll be looking for a break below 7,500 and a retest for that to the downside. I also put in the a small New Zealand chart here. You can see correspondingly New Zealand has done what it often does and followed the Aussie, and we've seen a significant reversal in price based on that rate reduction from the Bank of Australia. Over on the S&P, we are still in a trade short here. We had a bearish engulfing bar last week, this being the weekly chart. So far this week, we've had somewhat of a bearish recovery, but that still remains inside this bearish bar here, so we are only 2 days into the week. Although it's a short week because of bank holidays here in the UK, around Europe, and also most of the week being a bank holiday in Japan. But we'll talk about that towards the end of the week, because we will be very interested to see what happens particularly to the Nikkei 225 on Thursday when the Japanese come back from their bank holiday. Okay, that's the morning update for today. If you're interested in what you've seen, which is what we call our Phoenix Blue Pure Analysis, clean charts, etc., trading with a fundamental bias, we also use the Commitment of Traders analysis. If you want to know more specific questions, to info@phoenixblue.co.uk, you can organise a free consultation by emailing to that address. And as I said earlier, we've now got the website up and running, so there's some more general information here and also contact pages, so you can do exactly the same as you would by emailing there direct. Okay, thanks for listening this morning, and we look forward to speaking to you again in the morning. Take care.